On oil prices remain steady even as OPEC decides to stick to a policy of unconstrained output for the next 6 months. Amrita Sen, Chief Oil Analyst at Energy Capex, joins us from London. Amrita, thanks so much for joining in today. Two events, no cuts from the OPEC, high job creation. What will be the impact on crude in the near term?
OPEC's decision to roll over the 30 million barrels per day quota was widely expected. All the ministers had been talking about that in the lead up to the meeting, so that really wasn't a surprise. OPEC is in this for the long run. They want to make sure that prices stay low for some time, because without that, non-OPEC supply producers, who are the high-cost producers, won't react. You know, if they had cut output now, prices could have gone up, and that would have undone a lot of the work that's being, or that you're seeing at the moment with US rig counts falling very, very sharply. In fact, the 30 million barrels per day doesn't even have any meaning anymore, because actually OPEC is pumping 31.5 million barrels per day. But yes, I think overall it doesn't change the balances or the price dynamics at all in the short run. Prices will probably remain within the $60 to the $70 range in the coming weeks and months. In terms of the non-farm payroll, I think what it does do is add some short-term weakness to oil prices by strengthening the dollar. And I think that's been one of the key reasons why oil has come under pressure over the last few days, the dollar strength. And I think we could potentially see Brent crude trade into the high 50s and maybe WTI at about 55 if these key resistance levels are broken.
Okay, so high 50s for Brent crude. But how do you see the demand-supply situation for crude pan out for the rest of 2015?
Demand has actually been phenomenally strong in the oil market so far this year. In fact, demand has been the key reason, and in fact, I'd say the only reason why oil prices have recovered 30% from the lows. Demand growth, even though the macro picture isn't that great, has surprised to the point where global oil demand growth was up by nearly 2 million barrels per day year on year in the year to date. This compares to less than 1 million barrels per day over the last 2 years. I think going forward, demand growth will remain strong because prices still remain low, even if growth doesn't stay as high, just because the base gets harder. But I think the second half of the year, the key change has to be the supply side. So far, supply hasn't reacted because it always takes time for capex cutbacks to feed through to the supply, because these are long-term investments. You can't really expect people to turn off production. But now you're seeing the rig counts fall in the US, you're seeing big capex reductions, and by the end of the year, really in Q4, you should start to see global supply go under global demand, and that's when you should start to see the first stock drop.
All right, well, just hold on. The markets seem to be falling at this point. So once again, back at the low point of trade, the Sensex is now down more than 200 points yet again. And as you can see, in the last 5 or 10 odd minutes, the Sensex has taken a dip, and the Nifty has moved below that 8,050 level. Remember, this is the crucial support zone that we're watching out for on the index, at 8,050 level. And as Sudarshan was just telling us a while back, if that breaks, then there could be some serious panic selling on the downside. Just take a look at the Sensex losers this hour. All bluest of blue chip names are selling off. So, you know, that makes you uncomfortable about whether there continues to be basket selling or not in the market. HDFC, HDFC Bank, Reliance Industries, HUL, all blue chip names are now down anywhere between 2 to 3 odd %. So getting quite gruesome, Nigel, for the market now.
That's right, Sonia. I think we should pull up some intraday charts. Pull up the HDFC twins, HDFC as well as the HDFC Bank. Let's pull up the intraday chart. You'll see that those stocks, in fact, have moved to the low point of the day. IndusInd Bank as well, that one as well has sold off. Remember, at the start of the show, we were talking about the relative outperformance coming in from the bank Nifty. Did a bit of a pullback, but currently as well, that's got sold into. Take a look at that. IndusInd Bank at the low point of the day. HDFC Bank, Reliance Industries as well as is down close to around 2.5%. And there was a lot of talk that L&T is at least holding one end up. Now that one has lost a bit, and that's just happened in the last 5 minutes. So just pull up L&T, you'll see that one as well has moved to the low point of the day. But we're talking to Amrita, so let's get back to our discussion on crude prices as well. Amrita, do you see $70 per barrel be a cap for crude, at least for the next year?
I don't think we're going to necessarily put $70 as the cap, but we see a real tightening in the market when non-OPEC supplies start falling very, very sharply. But that doesn't happen till the second half of the year. Again, it takes time for these supply losses to feed through. Once that happens, we can easily see prices go back into the 80s and the 90s. But it may not happen in the first quarter of next year quite. It might take a little bit longer, maybe by the second quarter, but most likely by the third quarter of 2016, we can see prices rise quite sharply.
All right, Amrita, we'll have to leave it at that.